Hello, everybody. Good day, good day, good day. This is Roy coming your way. So I've been dropping some um clips from what I told you guys I'll be teaching on, which is Forest Foundation. So I'll be working on the materials. We'll be working on it, working on the slide, and finally we are done with the slide. So there's the material for the course. So I'm going to try to make it a very brief and understandable one so that we can understand, because this channel, the reason for this channel is to enable us understand what the forex market is all about, because the truth is forex is not complicated, but if you don't know the basics and the foundations, you will have challenges on the way, because some traders just jump to technical analysis and they go to MetaTrader 4, MetaTrader 5 trading view and they just analyze and start trading. But when you don't have the basics and the foundation of what forex is even all about, what is even the forex thing we are doing, you will have challenges on your trading journey. So that's why we created this YouTube channel to help us get the understanding. And I'm going to try my best to break forex down so that we can understand it bit by bit, and in subsequent times more videos will be coming out also to help us get more understanding. This is just the beginning. From this foundation we'll go to other aspect of trading, the pips, what pips are, what is the leverage, what is the lot size, and some other stuff that will help us in our trading journey. Okay, so today we're talking on forex foundation. This is the course outline. We're looking at what is forex trading, history of forex market, who trades the forex market, why forex is the largest financial market in the world, forex market structure, trading sessions, then advantages and risks of forex trading. My name is Rono Kwakbo. I'm a forex trader. I give financial advice. I'm also a crypto trader also, and a stock trader. I'm an investor in the stock market. So, but for now, we are just basing on forex trading. So let's move on. Okay, what is forex trading? Forex means foreign exchange. So the word forex is an acronym for foreign exchange. When you hear forex, it means foreign exchange. It is the market where currencies are bought and sold. You are exchanging money, one country's money for another. Forex trading is done online. Example, when you change naira to dollar, you are already doing forex. Traders just do it digitally to make money. Let me explain what this means. Now, forex trading means foreign exchange. It means it is a market where currencies are bought and sold. So, what does it mean? Everybody is into forex trading. The aboki man that you go and meet and say, I want to sell my dollar or I want to buy dollar. What you are doing in that moment is forex trading. It's foreign exchange. You are exchanging the dollar to get naira, or you are buying the dollar and you are giving the aboki naira. That is foreign exchange. That is, you are already trading already. But the one we are doing here is on the online platform. We are doing it on the internet. So that's the difference. This one, the aboki one is physical, but this one is internet. You are doing it online, you are doing it digitally. So that's the difference. So when you change naira to dollar, you are already trading forex. When you want to travel out of the country, you go to the um changing bureau and you want to change your money to the country you are going to. You want to change your money with you to that country's currency. Maybe you are traveling to US, you want to change your naira to dollar. You're traveling to Ghana, you want to change your naira to cedi. So this is it's very simple. This is the forex we're talking about, but you are not doing it online digitally. So you are changing your naira to dollar online. You are changing your euro to dollar online. You are changing your pounds to euro online. So that's the difference between the the one they do uh, offline and the one we're doing online. So let's continue. Forex trading is speculating on currency prices. You are speculating on currency price. What does it mean? You are buying the differences in currency price. Like we say USD JPY, for instance. You are saying USD is going to go up, JPY is going to come down, so you are going to buy. Or you are saying USD is going to come down, JPY is going to go up, so you are going to sell. So you are speculating the currency prices. So forex trading is all about speculation. It's all about analyzing the market. What is happening in the market? This is Euro USD. What am I saying from the speculation, from my analysis? I'm seeing that Euro is going to buy, meaning Euro will be strong. USD is going to fall, so I'm going to buy. All these things I'm saying, we're going to go more deep in them later on, but this is just the beginning. You buy a currency where you think it will go up, then you sell a currency where you think it will go down. You see the difference now? So buying and selling for the online trading that we are doing, which is the forex trading that we are doing digitally, you buy a currency when you think the currency is going to go up, then you sell a currency when you think the currency is going to go down. So that's the difference between um, buying and selling. You are buying, you have analyzed the market, you say this thing is going to go up, then you buy. Or you analyze the market, you say this thing is going to go down, then you sell. Profit comes from price movement. So your profit you are making is from the price movement. So the way we make money from forex trading is from the price movement. And this price movement rather is what we call the pips. So in my next video, I'm going to talk about the pips, the pipet, and all those stuffs. So that we can get the understanding of those ones. If you buy dollar at 1,500 naira and you say at 1,550, the difference is your profit. You see it now. So maybe you buy dollar, you say this is a USD and naira, for instance. You now say US is going to be stronger, then you buy at 1.5, then it goes up to 1,550. So your profit in that trade is 50 naira. So that is just simple. It's as simple as that. Forex trading is very, very simple. If you understand the simple this simple analogy I'm just giving, you understand forex trading is very, very simple. So let's move on. Now, why forex exists? Why forex exists? Why forex exists? Why forex? So why do we exchange currencies? Why are we even exchanging currency? Why do we exchange currency? One, countries trade goods and services. You can't use your naira to buy iPhone, for instance, from the United States. You can't use your naira to buy anything from China. If you say you're traveling to Beijing, China, you want to go and buy electronics, you can't use your naira there. You have to change your naira to their currencies. So this is the exchange you're talking about. So why do we exchange currency? So that we can buy goods, to trade goods and services, so that business owners can trade goods and services, so that countries can trade goods and services. Now, again, another one is tourist travel to other countries. Now, for tourists travels and the rest, people travel to other countries, you have to change your currency to that currency. This is forex trading. Businesses pay suppliers in other currencies. Government are back exchange money. So all these are what's and the reason why we do exchange currency, or the exchange of currencies, because you can't use your own country's currency to trade in somebody else's country currency. You have to exchange. Somebody from United States cannot come to Nigeria and is using dollar to buy things in Nigeria. It doesn't work, because you can't use the dollar in Nigeria. If you take the dollar from the person, you still have to go and convert, and nobody wants to go through those stress. So the person has to do his own work, convert it first before he uses to buy whatever he wants to buy in Nigeria. Same you, if you want traveling to Ghana, you have to change it to cedis first before you can do anything in Ghana. So this is just the forex trading. It's conversion of currencies, exchange of currencies, but we are not trading it digitally. We get it. So you're not trading it digital. It's just conversion of currency. You are changing this currency to this currency. You are changing this currency to this currency. So the differences and the speculations, that's what we are doing online, which is the forex trading we are doing online. Now, if Nigeria wants to buy a machine from the US, it must pay in dollars. This is what I was saying. That exchange happens in the forex market. So if Nigeria, for instance, maybe Nigeria government wants to buy something from the United States, they want to bring down maybe machineries to Nigeria, they have to buy it in dollars. So they have to convert Nigeria or Naira to dollars before they can make any purchase there. Now let's move on. I'm going to give a very brief history. You can read more on your own. Maybe you can go to Google and just read more on your own in regards to the history of forex trading. It's not really, you don't really need it though, but if you just want to have an overview of it, but I'll just say a little on it. Now, currency exchange has existed for thousands of years. We must understand that forex trading has been in existence. It has been before the stock market, it has been before the crypto market. It has been for years. It started from the time of gold. People were exchanging gold. The wealthy people, the merchants, they were exchanging gold at the time. So this is what have evolved over the years into the currency market that we are in today. Merchants exchange coins and money when trading goods across borders. Example, ancient Mesopotamia, the Rome, and the Silk Road. People have been trading money since the first trade across countries. So people have been trading money for eons, for years. All this started from trade by barter. When people will go to the market, this one will bring yam, this one will bring rice, for instance. They will not exchange. I will take your yam, give me your rice. You understand? So that is how it has been, and it evolved over the years into this currency. It was people that came up that let's develop something that people can use to pay for value or exchange value. So that's why they came up with this paper money, because it's something that people can move and use easily, unlike gold that is heavy, or like carrying goods and selling goods to the market. You're carrying bag of rice to the market just to exchange for yam. So people came together and came up with paper money. And you must understand that paper money is even failing now. We are now using digital money, cryptocurrency, paying online, card payment, and the rest. So the world is still changing, even though paper money is still in existence, but it's changing gradually. So you have to be able to um, um, see to what is happening around your world or around the world and fit into it so that you will not be left behind. Because trust me, people were left behind. Even in time of paper money, when it was coming, someone would say it won't work, it won't work. But you can't fight evolution, you can't fight technology, you can't fight society. So we have to be able to um we have to be in line and in tune with what is happening in our world. So let's move on. Now, who trades forex? Who trades for what are the people that participate in the forex market? We have a lot. We have the central banks, we have the commercial banks, we have the large institutions and companies, we have hedge funds, we have the retail traders, and the retail traders is me and you. So you must see that you can see now that forex trading has a lot of competitions. It has a lot of movers, people that move the market. So the central banks, we have that's the US Federal Reserve, the US Bank, the Bank of the US. We have the Central Bank of Nigeria. So when you hear central bank, it means the bank that are controlling nations, controlling countries. We have the Bank of Japan, the Bank of England, Central Bank of Nigeria, and the rest. So these are banks controlling nations, nationals, countries. That's the central banks. So that they are participating in the forex market. So you see, and these people, they are not trading. Some are not trading to just to make profit. Some are there to control the economy of their country, to make it stable. That is the reason why some are there, to make the currency of their country stable. So that is their own reason. So it's not everybody in the financial market that is trading for profit. Some are trading for control. Some are trading for power, so that they will always be the head currency in the world, like the US dollar. They are always in charge. They are always in power. Now we have the commercial banks. These are your normal banks. In these banks, these are the banks that are under the central banks, like your UBA. I'm talking from Nigeria now, like your UBA banks, the Zenith banks, JP Morgans, and the rest from the US. So these are commercial banks. These banks, they trade for profit. They trade for profit. They trade for profit in their banks. So they have traders, some higher traders who are trading for the bank. So these are commercial banks, and they move the market also. Then we have large institutions and companies. Big companies, they trade also. Like for instance, Dangote refinery can decide to say he wants to be trading the financial market. So you can get some top traders into his company, and they'll be trading for the company. Then we have hedge funds. Now hedge funds are like um, a situation whereby top billionaires in the world, they can just come around and gather elite traders, give them funds, and tell them to just trade for them and just make money from the market. So that's what hedge funds. Then we have retail traders, and retail traders is just me and you trying to understand the market and take our own profit from the market. So you see that your competition is so high. So you have to understand how the market works. So you can't afford to trade against the trend of the market. You have to follow the market because people are already moving the market. So your duty as a retail trader is to align yourself with what is happening in the market. Where is the market going? What is the trend of the market? Now, over time, I'll be dropping videos on trend. We're going deeper. So whatever things we are hearing now, maybe you don't understand it yet, don't worry. I'll be bringing videos. This is just the beginning. I'll bring you videos that will explain more and more. We're going deeper and deeper and deeper in this thing. So trends, and so you, as a retail trader, you follow the trend of the market because the central banks, the commercial banks, the large institutions, they have the one moving the market. So it's your duty to just align yourself. That is when you will now see SMC, supply and demand, and the rest. So we are coming to other zones. Now, big banks control the market, but small traders ride the movement. So the small traders are the retail traders. Their duty is just to ride, follow the trend of the movement. Now, how big is the forex market? Forex is the largest financial market in the world. Over 7 trillion dollar traded daily. 7 trillion dollars. So the market is always there. The money is always there. It's your duty as a retail trader to just um channel yourself rightly, understand the trend of the market, understand what is happening in the market, then make your money from the market. The money is always there. Over 7 trillion daily. So forex is one of the biggest platforms to make any amount of money you want to make in the world. But you have to understand how the market works, and that's why we have this channel to help us understand how the market works. Now, bigger than the stock and crypto market combined. It's traded. It trade happens 24 hours a day. Now, forex never sleeps. When Nigeria sleeps, London or New York is trading. So we have different trading sessions, and we're coming to that. So when Nigeria is sleeping, the forex market is still open and it's trading. It's trading Monday to Friday. So the market is always open trading. 24 hours, always open trading. So let's continue. Now, people will be asking and trying to compare and trying to ask, is forex gambling? Is forex gambling? Is forex gambling? What is the difference between forex and these bet Nigerians and the rest? Is forex gambling? Forex trading is far from gambling. It's far from gambling. Forex is not gambling. Gambling is based on luck. Forex is not based on luck. Forex is based on analysis and strategy. People have been trading forex for years. Professional traders have been trading. People like the Jesse Livermore, Paul to the Jones, great traders. So it's not a gambling stuff. It's not gambling. It's based on analysis and strategy. You have to understand what the market is doing. You have to understand what the market is saying, and you have to understand you as a trader. What are your risks? Um, um, what are your risks? What are the things you can take as a trader? So professional traders manage risks. Losses are controlled. So a trader plans before entering a trade, a gambler just hopes. So you must understand that Forex is not gambling. Forex is not just trying to come and cash $10, $100, $1,000. No, if you don't understand how it works, even when you make profit from the market, you will lose it to the market also, because you don't understand how the market works. So the goal is not just to get $10 from the market, $20 from the market. No, the goal is to understand what the market is all about. What is the market saying? Where is the market coming from? Where is the market going to? Forex is so beautiful. Forex trading is one of the trade where one of the business in the world where you can determine your loss. You know, you can start a business as a person, but you can't really determine how your loss will go or how your loss will come. But in Forex, you can determine how much you are going to lose in a trade even before you place the trade. So it's a very beautiful business, but you have to understand how it works. Now, how forex trading works: you trade currency pairs. So what we are doing is trading currency pairs. Example, we have the Euro USD, we have the USD JPY, we have the um, GBP USD, and so on. So different pairs are the major pairs in forex trading. So you are buying one currency and selling another currency. Price move due to demand and supply. If euro becomes stronger than dollar, euro USD goes up. Now let me explain. Now you trade currency pairs. You are trading currency pair euro USD. You are saying if euro goes up, you are going to buy. Now if euro go down, you are going to sell. Now this euro USD there, the euro is the base currency, the USD is a quote currency. I didn't add it to this slide, but when I'm going to my next video, I'm going to add that to my video. I'll explain major currencies. I will explain what quote currencies are. I will explain what exotic um pairs are, major pairs, exotic pairs, and the rest. Then what quote and base and the rest are, so that we can get what I'm trying to say. So you are buying one currency and selling another. So that is just forex trading. You are buying one currency and selling another currency. You are buying one currency and selling another currency. So that is just forex. If euro becomes stronger than dollar, like this is euro USD. If becomes stronger than dollar, you buy. Meaning euro USD will be going up. You see the charts going up, giving higher high, higher low, higher high, higher low. So as we go on, we'll talk about all those ones also. So let's move on. Now, where is forex traded? Forex has no physical location. It is traded online. So that's the digital we're talking about. So it's the internet. We trade it online, and there are different tools we use, like the MetaTrader 5, MetaTrader 4, to trade it online. Then we talk about the broker. So all this are what I will discussing in our next video. So I just want us to have the foundation and the basics first, so that when those ones are coming, we can relate. Now, it is traded online. It is connected through banks and brokers. Traders use trading platforms. So example, Forex is not in Lagos or London, it is on the internet. So what we are doing is online, the internet, so it's digital. So there are tools and there are platforms that help us place our trade, analyze the market, use that there are brokers we use to fund our account and the rest. So all these are coming in our next video. So Forex market session. So there are different sessions in the Forex market. We have the Asian session, we have the London session, we have the New York session. 3 sessions: Asian session, London session, New York session. Now the time I gave here is the Nigeria time, Nigeria trade time, so that we can understand what we are doing. This is the Nigeria trade time. Maybe if you check online, you will see Asia time there. You will see New York, London time and New York time, but I gave the Nigeria time for us to understand. So for Asia session is between 12 a.m. to 11 a.m. So when you check your trading view, for instance, check the market, or you open your chart around 12 a.m. Nigeria time to 11 a.m. Oh, sorry, that's supposed to be 1 a.m., not 11 a.m. That's supposed to be 1 a.m. That was a mistake there. So when you check your Nigeria time between 12 a.m. to 1 a.m., I think there's a mistake there. There's a mistake there. It's between 12 a.m. to uh, let me check. Let me check my. Okay, so for the Asian session, that was a mistake there. That must be an error during typing. The Asian session, the time is 12 a.m. to 9 a.m. 12 a.m. to 9 a.m. That's the time for Asia session. Asian session, the time is 12 a.m. to 9 a.m. For London session is 8 a.m. to 5 p.m. London session 8 a.m. to 5 p.m. Then for the New York session is 1 p.m. to 10 p.m. So that's the time. So please let's know that for Asian session is 12 a.m. to 9 a.m. London session is 8 a.m. to 5 p.m. Then the New York session is 1 p.m. to 10 p.m. In my next video, I'm going to make that correction well, but I don't want to interrupt this video again. So, but in my next video, I will add this again to the video so that we can get it correctly. So some session, they what we call overlap sessions. Now, overlap session is when the London session and the New York session overlaps, like the two sessions are open at the same time in the market. That's what we call overlap session. The two sessions, the London session and the New York session are active at the same time. So for between 8 a.m. to 5 p.m. and 1 p.m. to 10 p.m. the market is open at the same time. So there's a particular time why when that happens. So let's check it out. Now session overlap, most important part. Now London and New York session overlap. Now the time in Nigeria is between 1 p.m. to 5 p.m. So between 1 p.m. to 5 p.m. there's an overlap session in the market. So take note of it. And now why is this overlap session important? Both London and New York sessions are open. Most liquidity in the trade, strong price movement, big trends, best time for trading major currencies pair like the Euro USD, GBP USD. Now what is it saying? Now during this session overlap, there is more liquidity in the market, meaning the market moves so fast, meaning also that your trade goes more well if you can it helps you to see the market more closely and also see the direction of the market because there's more liquidity in the market, and liquidity is what helps the market to move. Liquidity is money. What moves the forex market is liquidity. And what is liquidity? Liquidity is money. So in our videos we'll be talking about liquidity, we'll be breaking all these things down. So liquidity is money. So this is what moves the market. So during this session overlap, market moves so fast, and it's the best time, it's a nice time to also trade between 1 p.m. to 5 p.m. Nigeria time. So strong price movements and big trend. The pairs that move so fast in during the best time for trading these pairs are the within between 1 p.m. to 5 p.m. and the pairs are Euro USD, GPU, and the other pairs also, other major pairs. Now Tokyo and London session also overlaps, but it's not really that like the London and New York overlap. But the time for the Tokyo and London overlap is 8 a.m. to 9 a.m. just 1 hour. So it's not really that significant like that. Now, when two big markets are open, lots of money moves. And money, I said, is liquidity. A lot of money moves at once, and that is when the market moves fastest. Beginners should know this for timing trades. So you have to understand and know this time, 1 p.m. to 5 p.m. So whenever you want to trade, check the time for the overlap to help your trade. Now, trade during high liquidity sessions. So you trade during high liquidity session. You trade during when the market is moving so well. Let's move on. Now let's check on the advantages of trading. The advantages of forex trading. Why people trade forex? What are the advantages of trading the financial market? Now, one is low capital to start. You don't need $100 to start trading forex. That's just the honest truth. You can start trading forex with $10. You can start your trading journey with $20. You can start a trading journey with $30. You can start a trading journey with $40. So it depends on your capacity. You can still start with $1,000. So depend on your capacity, but you must understand that you can start with low capital. You can trade from anywhere. So trading gives freedom. That's why a lot of people are going into trading, because it gives you freedom. You can freedom of time, freedom of location, financial freedom. So it gives you can trade from anywhere. You can trade from the village, you can trade from the city. As far as there's internet and you are connected to you have your platform on your devices, you can trade from anywhere. So trading gives you freedom. Trading, you start with low capital, and also, like I said earlier, you can determine your loss. If you are not greedy, you understand psychology in trading, you can determine your loss. You can determine how much you are going to lose per trade, because you must understand that trading is not a get rich quick scheme. It's a skill. People go to school for years to become medical doctor. People go to school for years to become engineers. People go to school for years to become pilot. Don't think that you can just jump into trading today and after 3 months you are already making big money. No, it's a skill. It's like studying to become a medical doctor. So you study the way they study to become a medical doctor. That's how you study to become a forex trader. There's no difference in it. In my own opinion, forex trading is even more difficult than becoming a medical doctor, because it deals with your emotions so highly, because it deals with money. So you have to pay attention to what you are doing. It's not you have to take it as a career. If you really want to enjoy the beauty of forex trading, don't just see it as something that you're doing on the side to just make $2, $10. No. When you take it as a career, you will put your all into it to understand what the market is really saying and what this thing is all about. Now, high liquidity, that is the money we're talking about. Market moves daily, opportunities to buy or sell. So these are the advantages of trading the financial market, the forex market. Now, there are also risks of forex trading, which we must understand. Like I said, it's not a get rich quick scheme. It's not something just jump in. No, there are risks. So for you to understand these risks and avoid the risks, you have to have a deep knowledge of what forex is all about. Now, loss of capital, poor risk management, emotional trading, over leverage. So these are the risks. You can lose your money. If you don't have good risk management, you blow your account. Emotional trading. Trading has to do with emotions, because it deals with your money. People don't play with their money. People don't want to lose their money. So their emotions is involved. So you see somebody place a trade and is checking whether it's going to hit his stop loss or it's going to hit his take profit. He's checking the movement of the candle. He's trying to check the candlesticks, because it's dealing with his emotions. Then over leverage, you are over leveraging your account. You will blow your account. You're using the over too much lot size, you blow your account. So these are the things we are going to break down more in other videos. Now, example, forex can pay you, but it can also collect money if you are careless. So you must understand that forex is 7 trillion market we are talking about. $7 trillion market. So don't think that your $10 can give you $1 million in just one trade, or your $100 you can just flip it. You have to understand how the market works. The money is always there, but with the right skill and knowledge, you will win the market. So let's continue. Okay, I think we are almost done. Now, in summary, Forex is currency exchange. It is the largest market globally. Trading involves buying and selling currencies. Knowledge and discipline are required. Forex is not a get rich quick scheme. So, in summary, I believe we must have gotten one or two from all I've been saying in regards to forestry. This is just the foundation. That's why we are giving. These are just the simple things that can help us in this forest journey. So forest is all about currency exchange. Currency exchange, that's just a simple thing. It's just you exchanging naira to dollar, dollar to naira, but in the process you are making money. That's just forex trading. You are exchanging dollar to naira, but in the process of exchanging, you are making your own money. That's the business you are talking about. So you are exchanging naira to dollar and you made $10. You are changing naira to dollar, you made 20. So that's the business we're talking about, and it's the largest market globally, $7 trillion market. So the money is always there, but with your skill, you will cash out the money. Trading involves buying and selling currencies. It's just about buying and selling currencies. That's just trading. Buying and selling currencies. We have the stock market that deals with buying of company shares. Then we have crypto that deals with buying of crypto and trading of crypto. But trading, forex trading is just currencies, country currencies. Then knowledge and discipline are required. So you have to have the right knowledge, and that's why we have this channel. So very soon we're going to drop another video where we talk about major pairs, talk about quotes, talk about base currency, quote currencies, base currencies, major pairs, pips, pipet, leverage, and the tools, what broker is, what metaphor is, what trading view is. So we'll bring all these things. Then from there we'll move to the more advanced part of this journey. So trading is going to take a lot. It's going to take a while. It's going to take a lot from you. I want to encourage us traders and beginner traders. You must understand that trading is not something you just jump in, then after 3 months you want to start trading live or funding your account, and you've not gotten adequate and enough knowledge to scale. Don't be too in haste to fund. Have the knowledge. Understand this. There's a lot to learn in trading. There's fundamental analysis, there's technical analysis, there's the psychological part of it. So you have to understand and get all these things right first before you jump into the real life trading account. I will encourage you to subscribe to this channel. I'm running Wapo on every platform. I'm on TikTok, I'm on Instagram, I'm on Facebook, I'm on YouTube also. So you can subscribe to my channel, like and follow, so that whenever I drop, I turn on the notification bell so that whenever I drop any new video, you will be notified also. Very soon, we're going to drop another video and you'll be notified. Thank you and do have a great day. Enjoy. Peace out.